Our next guest says that both the economy and the stock market are in late cycle phases. So what is an investor to do? Michael O'Keefe is the Chief Investment Officer at Stifel, and he joins us now to discuss. Michael, thanks for joining us. So let's start with the economy right now. Yes. So we've gotten some mixed housing data. The labor market holding in there okay, but shows some signs of some weakness, I think, that weren't there a few years ago. What do you make of where the U.S. economy is as we wrap up the first quarter?
We use the term solid. So basically, again, looking at the data remains positive. And what we're seeing is it just slowing down a little bit. But when you look at unemployment, you look at confidence, you look at the consumer, retail sales, looking back at things like that, generally speaking, things are pretty good.
What would be something that could take the market higher? I mean, and keep the economy growing, even take it up another leg? Ditto for the stock market. What's a positive scenario? Yeah,
well, the positive scenario, really, in our view, is really around resolutions. So you look at what we're going through, even with Brexit, it's kind of the messiness of Brexit this week. At some point, that's going to work itself out in one way or another, hopefully not without a deal. But the bottom line is, I think the market sees some relief from that, number one. That gives the people in Europe, for example, the ability to kind of refocus on their situation and try to support growth there. I think another example would be U.S.-China trade. That's been kind of quiet. That's because they're negotiating. And again, we look to April for a possible deal there. So our view has been really around resolution and a sense of positivity that comes from that.
Sounds like mindfulness.
It is. Right? I heard the term, right, and I picked it up. I'm a long-term optimist.
All right, there you go.
Mindfulness. You also talk about composure in stocks, which is funny. I haven't really heard about that so much before, looking for stocks that have composure.
Well, yeah, it's actually clients.
Is that what it is?
It is.
So you want clients to have composure.
Yeah, so
what does it mean?
Yeah, the way, if you think about kind of the basic tenets of investing, obviously the deal when you're investing in stocks is you have to be in it for the long term. And one of the worst things that an investor can do is pull all the way out when the market turns down. The market tends to recover, and that's the wrong time to be out. So one of the things that we do is to focus on essentially a behavioral finance model with all kinds of different components to it, one of them being composure, the idea that an investor is watching what's happening in the market. If they can't take the move down, they should self-reflect, and when the time's right, de-risk the portfolio a little bit, not when stocks are down. But we've actually been guiding our advisors to talk to clients. The market's back up this year. It's a good time to have that conversation. And if you think you can't handle the inevitable bear market that's coming, may not be for a while, it's a good time to raise a little cash, to build a little dry powder.
Now, the flavor of the week in investing circles has really been the inversion of the yield curve, 3-month, 10-year.
Oh, boy.
I'm sure you've gotten a lot of questions about that. Two-parter. What have you been telling folks about this? And then just as you see that indicator of the economy, does it concern you that recessions have tended to follow that inversion in about 18 months' time?
Right, 18 months. First of all, I'd say our general outlook has been that the economy is going to be solid for at least 18 months. I think this inversion, with the work that we've done, really focuses a little bit on technicals. What are drivers of really buying paper at the long end, which is driving prices up and yields down. As it relates to the inversion, we're going to see if it sticks, I guess is the way I would look at it. And in the meantime, keep looking at the data, looking for cracks in the economy, but we're really not seeing it yet.
Just in terms of getting defensive right now, you said you don't expect a recession until mid to late 2020 at the earliest, but it is a good time to get defensive. So what sectors in particular? Well,
I guess the way we think about it first conceptually is it's a little bit like that, raising some dry powder. It's about being methodical and sitting down and saying, look, here's where my portfolio is. How can I build some defensiveness into it? One way, of course, is to raise a little cash. But as it relates to sectors, a simple example would be durables, consumer durables. We think the consumer's here. They're going to stay with it. Exposure to durables would be good. You have sort of the classic old-fashioned utilities is another example. But I also think the way that we're investing, there are we obviously use a lot of third-party managers and mutual funds. There are a lot of firms that intentionally try to manage the downside risk in their exposure. And so you can actually measure for different styles of investing how well they do when the market's down. And you can find those that have what are called a low downside capture.
All right, Michael O'Keefe is the Chief Investment Officer at Stifel. Thanks for joining us.
My pleasure.